right, what's up? Tim Sykes here. Wanted to do a video on today's trading. Nothing really big, nothing really great for me. There was an opportunity, I missed it. It was too fast. Lots of small winners, so I can't complain. Like you always have to have perspective. Any trade that you do, you're either going to learn or you're going to earn or both. So there's no bad trades. A lot of people think like, oh, if you lose money, it's a bad trade. A lot of the time, if you lose money, it's actually a great lesson. So it's still useful. I actually always worry about students where they make money on a lucky or subpar pattern and they learn the wrong lesson. That's a bad trade. So don't just look at your P&L for good versus bad trades. You guys really have to learn the process. And I gave a big in-person webinar the other day. We'll have it recorded for everybody. But, so many of you are so obsessed with making money right away. And if you don't capture the money, then you're discouraged. If you don't make as much as you think you should, you're discouraged. If you only make a very small amount, you're discouraged. If you lose money, you're massively discouraged. And what you have to realize is none of that matters. Like when you're just learning, the money that you make or lose is negligible. If you actually learn from the journeys of my now 40 plus millionaire students, none of them made much in year one. Doesn't matter if it's a fast market, slow market, doesn't matter if it's Tim Grittani, Jack Kellogg, Mari, Matt Monaco, Kyle, like all the millionaires, they really focused on their education. I mean, Mari, my first female millionaire student, didn't even trade in year one. She focused on her education so much. So that by year two, year three, you have an understanding of what's going on. You have an understanding of what patterns you're good at. You have a little bit of an understanding of what's working in the markets. You need both good and bad markets to really have perspective. But, the reason why I'm doing this video is because I want to go over each of these trades and I want to show you that, not every day is going to be huge. You're going to be frustrated sometimes. You're going to be disappointed. I don't really have much more to learn with this process, I'll tell you the truth, after doing this for 25 years. But I still recognize that, there's some disappointment feelings that I have, and it's okay to have them. We're human, and it's okay to talk about them. But the main key is that you should be focusing on your total gains. Your total gains since you started, your total gains for the year. You're trying to head in the right direction. Again, it's okay if you're going the wrong direction in the beginning. It's okay if you're trading small. It's okay if you're paper trading. It's okay if you're not trading. But in the long run, you got to focus on the big stuff because it's very easy to get caught up in the minutia, the daily, day-to-day grinding where you're inevitably going to be frustrated by some trades. Especially in this market. During the all-day webinar yesterday, I interviewed Andrew, and again, we'll post the video soon. And, Andrew is one of my newest millionaire students. He's up already over $200,000 in 2024, and he's really disappointed because it's choppy trading for him. Jack Kellogg up nearly $1 million. You ask him how's trading, very disappointed, even though he's made nearly $1 million in 2024. A lot of choppy stocks. So that's the market. That's what you have to expect. I do want you watching, yesterday's video lesson, like it seems so easy. Look at this. I just nailed, using XGPT, I nailed my weekend play on IBRX. I nailed CAUD. I actually missed MULN, which was another XGPT play. But yesterday's video lesson was like, wow, look how simple this is. Some days it's going to feel really good and it's going to feel really easy. And then some days are going to be frustrating. And I want you to be aware of this because a lot of people bet too big. They put, too much meaning on frustrating days. And then they kind of discount how important easier days are. This is trading. Leave a comment underneath this video if you understand that some days you're going to be frustrated. Some days there's not going to be great plays. Some days the best trade is no trade at all. Some days the market won't do what you think. Some days the market will do what you think and then it'll flip on a dime like today. So you just have to keep going and you can't really ever get too discouraged on any one trade. The whole question is, can you be better prepared tomorrow? Can you be better prepared next week, next month, next year? So that when there's more opportunities, you are ready to capitalize, or more ready to capitalize. Today I started off with, first of all, I should even mention, like, yesterday afternoon, CGC was running. This was a weed play. Really frustrating for me yesterday because it just kept running. And I overthought it right in here in the 11s. And I got in the 11s, but I was like, oh, I kind of missed the 9s and the 10s because, I was giving the webinar, so I actually missed this. I had a whole presentation. I saw the news here, and I was like, wow, this can keep going. What you have to understand is that I don't mind playing it a little too safe in here when I know that I chased a bit. If I had been here from the 8s or the 9s, it would have been a much better trade, but sometimes life gets in the way. And then it kept going, and then I didn't want to chase it. So already I'm frustrated from yesterday. Yes, I made a few $100s, but I missed out on $4 a share like crazy. So I'm still thinking about that today. I can't help it. This morning on AGBA, this was a big spiker from yesterday, and it looked like it could run again. It was right in here, right near the open, and it looked like it wanted to, try to really come back. And we know that yesterday it had one spike, drop, one spike, drop, one spike, before it began fading into oblivion. But I thought that it was going to have a good chance at one of these things. So it had already spiked a few times pre-market. I just wanted one more. Didn't get it. And there were some big sellers. You don't have to wait for a loss. A lot of people were like, Tim, like, what's going on? It didn't hit your goals. It's not a loss. Why are you out? It didn't do what I wanted. You don't have to wait for a loss. You don't have to be like, well, like, I know some people do that. I know in Tim Grittani's DVD, he does that. I mean, I was yelling at Tim Grittani's DVD. Like, I'm like, take it. But he wants to give these charts massive amounts of time to play out. But you also have to understand, like Grittani and a lot of other traders, they focus mainly on A+ setups. That's where they can size in. I'm doing a lot of speculative trades. This is not an A+ setup. If I had to grade it, it's probably like a C+, maybe a B-, but it can still work. That's the cool thing with these, speculative runners. So I don't mind this. It was a speculative trade, not the end of the world. Didn't really work out. Then I went back to this. This was funny where, I made like 420 on a weed stock. A bunch of you commented on it. I was, again, still frustrated from the previous day on CGC missing this. And it was dipping and it was panicking. I saw a lot of you guys buying it in here in like the, 12s and 1170s, 1160s. And I was like, go back into the chat. I was like, no, wait for more panic. It went up a lot the previous day. And I know because I missed it. So here, I really like, on bigger companies especially, I like round numbers cracking. That's where a lot of market makers take these stocks. And, when the round numbers crack, it can often be a fake out. We actually saw this. I should have traded this one today. Didn't even trade the best trade. Where is it? I'm watching too many plays. Oh, yeah. Let me get rid of AGBA because it's irrelevant now. CTMX. So I wanted to dip by this on the crack of, where was it? Was it 5 or 4? I thought it was 5, but I don't even know. Maybe it was 4. One of these. I really don't even remember. But it was a potential dip buy on one of them where I think it was probably like right here. Yeah. I don't know. But it was so quick. I'm guessing it was like right here. This really pisses me off. Was it this one? Maybe it was this one. Anyways, it was a round number, okay? When you're looking at a big percent spiker and you're looking at a dip buy, I really like the round number to crack. And whichever one it was, go back into the chat and see. I think it might have been this one. But you want the round number to crack. And right here it cracked, from 4 to like 397. And it was literally 1 second. It was 1 second. And it was so like next to impossible to get it, because it was 1 second, then it bounced, like 30 cents a share. So I missed that dip buy. I don't even know if that was the place, but that's what I want on CGC. Okay, CGC, I saw a lot of people buying it here in the 11s, and I'm like, what are you doing? Right, where was it? Right in here. I mean, it doesn't look like much in the chart because it didn't bounce much, but like when it cracked 11 right here, there was, I mean, it doesn't look like much, but let me just try to zoom in so you can understand. There was like a 50, 60 cents a share bounce. So you had the initial crack right here, and then it bounced up to 11.33, but then you had a secondary crack here, down to like 10.70, and the peak was like 11.30, so like 60 cents a share. But if you are ever in doubt of where to dip buy, I wouldn't want to dip buy when everyone else is dip buying on a big company like this. The big morning panics work best on small companies where there's inefficiencies, where everyone's panicking, the stop losses are getting taken out. On a bigger company, you want to be more conservative. Like you don't know where the bottom is. Remember, if you were watching this yesterday, I mean, there was a massive spike that just kept going. So this was a really good entry on my part. It doesn't look like much, but this is, I mean, my biggest trade of the day, but also I stuck to my rules. And this is why I want you guys in the chat room. It's not just about my trades. It's not just about my watch list. Like you can see my commentary where I'm like planning ahead and I'm like, hold. So why a lot of people lost money on this, buying in the high 11s or mid 11s for all sorts of reasons. I'm like, I don't want any part of that. I'm going to wait for a crack. Then I finally got the crack, and, it wasn't like a huge bounce because, again, this isn't an A-plus setup either. But at least you have better odds if you do wait for that round number to crack for max panic. And like I said on the other one, I missed my execution. And then CYCC, this was probably my worst trade of the day. Just trying like a late day bounce play. It really spiked up big here. I didn't really want to chase it because I saw that it broke out at 320 and, you could take it at 360 and then it comes back down to 320 and then back to 360 and then back to 320 and then up to 4. Like there were some opportunities to buy it at this, key level in the 320s. Again, when it cracks below this and now resistance is here in the 320s, a lot of people were like, Tim, buy it right here. And I'm like, no, why? 320 was support on the way up. It's going to be resistance on the way down. Okay. Right here, it's using 320. This is resistance here, 320-ish. Then it's using 320 as support as the uptrend is up and in place. And then when the uptrend gets broken, oh, look, 320 is resistance. So you really have to look at these key numbers. I know that many of you were messaging me. I can't message everybody. Like I'm trying to focus on trading, guys. I'm doing a challenge webinar on Thursday afternoon. So I hope you challenge students ask me questions. That's when you can do Q&A with me when I have time and these video lessons. But, there's a reason why I wasn't dip buying it in here because I saw that the intraday uptrend was cracked and now that former support is going to be probably resistance. It doesn't have to work every time, but probably. And then it was petering out in here, and I'm thinking that, it might have one last little spike. So I was dip buying it in here, using this as support, like it was already down, I mean, off the highs in the 4s, and I'm already buying it in the 270s. So massive drop off the highs. I'm not getting sucked into this fake out, and there's a lot of support from the morning, right here, 252, 260, and I'm buying it, around 270. So just not much risk. But that said, it didn't really bounce. I don't know if it didn't bounce because it wasn't a great setup or, what definitely hurt was the S&P 500 was just dropping like a rock into the close. We had a really nice spike, big spike, with the initial Fed meeting. And then this is what happens. This is the danger of trading Fed meeting. The first move is often, reversed by the end of the day. So if you're buying anything, into this market drop into the close, like the NASDAQ got wrecked too, it's really tough. So, CYCC is actually finishing right around where I bought it, around 270, but there just wasn't much there. And again, you don't have to wait for a loss. I saw that it wasn't bouncing much, and I was just like, you know what, like I'm just out. And that's my day. I missed the other play when the market maker, dropped it for 1 second and I couldn't, buy it. And it was a 30 cent a share bounce in like 1 second. And then these other plays were disappointing. Blame, CYCC. It's a speculative trade, but blame it most likely on the overall market. CGC, there just really wasn't much opportunity for a dip buy. Congrats to shorts. That was really the play there. And then AGBA, there wasn't really much on it for me either. So sometimes that happens. And again, a lot of this is psychological, where if you spend the whole day or a good chunk of the day, you feel like you should get paid. You feel like the market owes you. It doesn't. Okay. You could spend all day, every day and lose money all day, every day. Many traders do that. That's why trading sucks for them. Some days, if you're really well prepared and you see a good setup, you could be there in and out for 5 or 10 or 15 minutes and make more than most people make in a week of hard work or a month of hard work, or sometimes even a year of hard work once you size up later on in your career. That's the gift and the curse of trading. It's not an exact science. You're not going to hit home runs every day. There's not going to be even home run balls every day. And you can't get too disappointed in yourself. You can't get too disappointed in the market. And you just have to keep going. And I see a lot of people, when you get disappointed in yourself or in the market, you bet bigger because you're like, I'm doing something wrong. I should be making more. This is the time to size down, to slow down. There's a saying, sell in May and go away. The next 6 months historically has been a weaker time of the year, which, doesn't mean that you shouldn't look at the market any day, but it's good just to recognize seasonality. So when you're not doing well, when the market's not doing well, that's when you size down. That's when you trade less. Jack Kellogg and I have been in Japan for several days now, and it's because, guess what? April was his worst month of the year. So he's okay to travel. Not especially like overseas. I'm still trading, no matter where I am. But if you recognize where your strengths and weaknesses are, you can start to say, oh, okay, this is a weakness. Let me trade less or not trade or size down. Oh, this is a strength. Let me size up. Let me trade more. And that's what I'm saying. Like, every trade helps you learn what your strengths and weaknesses are for yourself, for your personality, for your time zone, for your experience level, and in different markets. I saw a lot of people surprised, with what was going on with the overall market. I'm not that surprised. I didn't know that the market was going to tank after the Fed, meeting ended. I saw some people said like it would. Of course it would. You don't know. You just have to expect the unexpected with Fed meetings and never, ever get so confident in like the first move of a Fed related move, because, again, more times than not, the first move often reverses. Even if, we could reverse again. Like, it's not to say that we're definitely dead in the water now. But, we have also, aside from just sell in May and go away, we have also had an amazing 6-month period. Like, I think this is one of the best previous 6-month periods in decades. So having a little perspective of just how far we've come will help you understand that. We're just a little off the highs, but this is the NASDAQ. This is going all the way back to last May, and we're 30% higher. That's a big move for an entire index. And if you look at, giant AI plays, like there was a debate whether NVIDIA would ever break, like 400 if it was overvalued in here. Then it goes to nearly 1,000. And, now we're a little off the highs, but we're still up a huge amount. So hang in there, be okay with frustrating days. Definitely watch, yesterday's video lesson, or by the time I post this, I guess 2 days ago, video lesson. Because not every day is frustrating. Some days the heavens part and solid plays open up. So you want to be ready for the frustrating days mentally, and then you want to be ready for the easier days or easier plays using the right tools. XGPT and stocks to trade breaking news you should be using every single day. Not that I'm trading every stocks to trade breaking news alert or every XGPT play, but I'm using these tools to add these stocks to my watch list quicker than people who don't have these tools. That's why they're such a huge advantage. That's why, my top students and I continue to outperform, because we have the tools, we have the education, we have the strategy, and most people have none of that, or they're missing some of that in their arsenal. The more tools, the more preparation you have, the better your odds of success. I'll see you guys in chat. Challenge students, come ready with some good questions, please. All right, what's up? Tim Sykes here. I wanted to do one more video. I didn't even get a chance to post the last video about frustration, so I'll just combine it. I'm watching Apple spike after hours, which is good. 3 out of 4 stocks follow the market. We want Apple to do well. Let me see, the NASDAQ is probably spiking too. Yeah, a little spike. You know, it's a good market. For me, a little bit of another frustrating day. That's why I'm going to combine these video lessons. Frustration is part of the game. It happens. You know, small gains, small losses, lots of lessons. I think that's probably the best thing. And before I talk about my trades, I got to give a massive shout out to Jack Kellogg. He had JAGX this morning at 22 cents. When Stocks to Trade posted this chart, it was at 32 after hours. Now it looks like it's going up to 33, 34. He's made roughly 70 grand in a day. And in case you don't know, Jack and I have been in Japan for the past few days celebrating his birthday. He's been taking some time off. April is usually his worst month, so he planned his travel. He was down, roughly 100 grand in April, still up close to $1 million. He's just trading huge with size. And now in one trade in May, JAGX, 70,000. So he's made back most of his losses. We'll see what it does. But major props to him. And I'm really excited about this. We have this project that we've been working on, Jack's next big trade. We're going to debut it in less than a week. I'm literally moving $500,000 of my money to trade this stuff because for me, I probably should have taken JAGX today, because Jack is just on fire. And I also need to be a little more patient, You look at my trades, it's cool. Okay, I'm making... I'm really actually proud of my morning trade. This was my best trade of the day, maybe even the best trade of the week here on CGC. Nothing huge, roughly $1,000. But at the same time, this thing was squeezing in the morning and it had already spiked. This is the key that I'm looking for with all my trades. And I think, all of you would be, well suited to do this. Look for stocks that are already spiking. Then you don't want to chase and you buy it on a dip. This has pretty much been my strategy that's made me 6 figures in 2024 so far. Focus on the spikers. Don't chase. Don't buy at the high of the day. Sometimes you're going to buy into a brick wall. That would suck. So for me, I waited for a little bit of a dip. CGC has been in play the past few days. It didn't finish well today, but I'm not interested in what it finishes. I'm just interested in can it spike, Today on Thursday, really good spike at the open. Wednesday was pretty trash. Tuesday, it was a really big spiker. So it really moves in waves. You want to try to ride it when it spikes big. I did a terrible job here. I made 15 cents a share and it spiked $5 a share for my entry. And on this one, we didn't get the big spike. And this is why, between the two trades, if you play it safe, it's really difficult to lose. It's easy to lose if you hodl. It's easy to, believe in these companies and just be like, no, weed is taking off, Tim. Stop going for such small gains. I don't care what weed is going to do. I'm interested in price action and locking in profits. So I got this on a spike off the day highs right near the open. And I sold it into a spike above the previous highs. I think the previous high when I bought it was 1238, I think, or 1235. And I got it just under 12. And then once it tested the 1230s, it hung around there for a few seconds. And then it finally, broke through. And it really can be, that simple. It's all about looking for the day high, using that as a guideline. Some people will say that I trade, too scared, too safely. I agree. It went up to 13, so in hindsight, I sold a little too soon, but look how quick it comes down. These plays, especially if you're going to trade near the open, it went 13 down to the 10s in the first, 20 minutes, 30 minutes of trading. So you really got to be prepared, and then it couldn't come back. So when you're trading a fast mover, heavily shorted stock, you lock in those gains. And I'm really happy with that. Then I tried CZOO. This was my bad because like sometimes this is going to happen to you. And this is why I talk about it, because I want you to understand, like, it's okay to be frustrated. EBS was the big morning spiker. Great earnings winner, big short squeeze, big spike, and this is from like 10 a.m. to like 10:20 a.m. So literally $3 to nearly $5 a share. This is a short squeeze, ladies and gentlemen. Okay, some shorts are like, no, it's not just shorts. Yes, it is. By the end of the day, it's right back to the threes. But over-aggressive shorts were shorting it, and they got squeezed. I coulda, woulda, shoulda been focusing on this. I really wish I could go back in time. I saw it here, breaking the day high at 340, and then I saw it like kind of having a little resistance in here at 350, and I was like, well, the breakout from 330 to 350, not much. And I took my eye off it. And then it went from 360 to 460 in about 4 minutes. So that was my bad. I saw it, I talked about it in chat, but I hesitated and then I missed it. And then I focused on CZOO, which, I also missed the morning spike on. But luckily this one had a few big spikes. So I was dip buying it right in here. And I thought 1 spike, 2 spike, 3 spikes, 4 spikes. I thought that it could have another one. And I ended up being right that, there was going to be another one. But I didn't give it time. I was looking at EBS. I was feeling FOMO, fear of missing out. So this could have been a $1,000 plus profit. Like I was dead on that it would have one more spike. You never know if it's going to be the final spike or not. Like if it had it cracked 11-ish here, I would have simply cut losses. Some people say, like, how do you know if there's going to be another spike? You don't know 100%. But there's more upside than downside, right? Like I was in at around 11.05. If it had not, I didn't know that it was going to spike, actually all the way up to 13. I didn't know there was going to be $2 a share of upside. I thought that, maybe it goes back to 12. So I thought $1 a share of upside. But if there's $1 a share of upside and I'm willing to cut it, let's say in the 1090s, 1080s, so, call it moves fast. So call it 20 cents of downside risk and $1 of upside potential, 5-to-1 risk reward. Okay. That's pretty freaking amazing. So I wish that I had given this one more patience, but I was really, I remember it in my head. And I think I even said it in chat. I was like, I should be in EBS. Why am I trading this one? And then, it's like if you're changing lanes in the highway and your lane is slow and then you go into the other lane and you want your lane to go fast, and then the lane that you were previously in was the fast one. Like that's basically what happened here. So I missed EBS, and then I missed out on CZOO, and then I went to EBS twice, and I got a little profit, but then I had a loss. Like there just wasn't much to it, So sometimes like you're gonna go with the wrong play. CZOO, that was the right play. There was $2 a share of upside. I whiffed. EBS had the morning spike and I missed it. And then I'm trying to trade it into this junk where it's just gradually downtrending. So, this is not best case scenario, as you can tell. There's plays, I took the meat of the move on CGC. I'm proud of that. But I missed CZOO for $1 or $2 a share. I missed EBS for a few thousand. So, still finishing up, but frustrating, and I just want to be honest about it. This is trading. You're never going to really know which play is going to be, perfect or be huge. I'm exhausted. I don't know if you can tell. I got some crazy schedule right now, but sorry, challenge students, for missing the webinar today. I'm dead. Thank you, Ben, for subbing in and teaching options. And thank you, Jack, for JAGX, everyone, who saw that, congrats. But thank you, Jack, for being willing to teach. In less than a week from now, you'll learn more about a strategy. I'll post the link to this below. This is what's so great about this. Even if I'm not 100% on, even if I'm like in my own head a little too much, there's plays galore. And now you've got traders and mentors galore. Jack was red in April, right? But now, 70 grand roughly so far in May. And just like one trade. So this is trading. You try your best, try different strategies, recognize that nothing's going to be perfect, and you just want to try to capitalize on the opportunities. Whether you're prepared or not, the market is going to be there. It's going to be offering it up. Leave a comment below. Let me know if you're capitalizing, if you're learning, and if you promise to stay dedicated. I'll see you guys in chat.